and gentlemen, good day and welcome to the Ratnamani Metals and Tubes Limited Q2 FY24 earnings call hosted by Monarch Networth Capital. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sahil Sanghvi from Monarch Networth Capital. Thank you, and over to you, sir.
Yeah, thank you, Darwin. So, good afternoon to everyone. On behalf of Monarch Networth Capital, we welcome you all for the Ratnamani 2Q FY24 earnings call. We are delighted to host the management of Ratnamani Metals and Tubes today, and from their side, we have Mr. Prakash Sanghvi, MD and Chairman, Mr. Manoj Sanghvi, who is the business head for the carbon steel segment, and also Mr. Vimal Katta, their Chief Financial Officer. So without taking much time, I'll hand over the call to Mr. Manoj Sanghvi for the opening remarks. Thank you, and over to you, Manoj, sir.
Yes, thank you, Sahil. Good afternoon. Good afternoon to everyone. I welcome you all to this call and hope everyone is doing good. Our results for the second quarter of FY24 have been uploaded on the exchanges, and I believe all of you had the chance to go through it. Just to give you a brief, our standalone Q2 revenues are 1084 crores with EBITDA of 252 crores and a net profit of 169 crores. Our quarterly revenue has increased 19.9% year-on-year and down marginally by 3.3% on sequential basis, mainly attributable to softer steel prices. EBITDA has increased from 155 crores to 253 odd crores on year-on-year basis, registering growth of 63%, and sequentially it has increased by 22%. Due to favorable product mix and few special jobs, our EBITDA margin has also expanded by 6% on year-on-year basis and 4.8% on sequential basis. On the half-year basis, our revenues witnessed 16% growth to 2,204 crores and EBITDA of rupees 460 crores as compared to 294 crores in H1 FY23. For H1 FY24, our net profit is 305 crores compared to 185 crores in FY23. During the quarter, in spite of inflationary pressures felt on operating cost, we have been able to improve our profit margin due to better product mix. However, as we move forward in FY24, we may see some line pipes orders for oil and gas as well as water, and hence we continue to expect our annualized EBITDA margins broadly in the range of 16 to 18% under normal business conditions as guided during our earlier calls. Orders on hand as on 1st October is rupees 2,979 crores. To add a new growth driver both domestically and globally, our company has forayed into pipes, spooling and auxiliary products business through a joint venture with Techno Energy Switzerland, a group based out of Switzerland having more than 100 plus years of experience in manufacturing of pipe spools, hangers, support systems and other auxiliary products. As informed through the exchanges, RMTL have 51% in this JV and 49% is with Techno Energy. The JV company will cater to oil and gas, thermal and nuclear power plants and other allied industries, which will open new avenues for our company. And in future, we expect to see good traction in core energy segment and other critical applications in various industrial segments. This will also help us deepen our customer base by expanding the product basket. We expect this entity to start commercial operation in next 3 to 6 months. That's all from our side. Now I would like to invite questions from the participants. Thanks.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, hi. Congrats on a very good set of numbers. Firstly, on the export side, I think when we had basically commissioning this extrusion facility, one of the aspects was that they wanted to go into higher diameter and more validated products which can be supplied in export market. So where are we in that journey? Obviously our export order book has been increasing over last 1 year, 2 year perspective. So just give some color on that.
So currently the extrusion what was installed last year, the ramping up of capacity and approvals is going on. It's an ongoing process. So yes, we are seeing more and more traction both domestically and exports. And going forward, as we have more approvals, the utilization levels will be much better. So for trial purposes, we have tested all the complete size range up to 10 inches and all grades we have tested, and successfully all the trials are successful. Yeah, and few commercial export orders also we have executed for various grades.
Okay, so that means that going ahead, I think on the export side, we would definitely see more orders coming, like when all these products get commercialized, basically.
Yes. As informed earlier, we are seeing a good amount of traction for special grades also.
Okay. Special grade means like more nickel related grades, or these are in terms of application they are there.
Related to stainless steel only, but high alloy grade.
High alloy grade. Okay. So and these would be a comparatively better margin than earlier grades that we're making.
Yes, margins would definitely be better, but quantums would not be as the normal grade. Okay.
But yeah, I mean, in directionally, I think the margin profile or the valuation profile should improve for us in SS segment.
Yes, overall, the SSCS, our aim is to improve the margins wherever possible. And for this particular stainless steel, where you are doing high grades, of course, the margin is going to be high. Okay.
And I remember that even in the LSAW segment, we had got an approval from Saudi Aramco earlier, right? So, yes. So even LSAW segment, which are mainly catering to maybe domestic market earlier, more value-added products, there also with this new mill, I think we are now venturing into more product areas.
So for LSAW, Saudi Aramco, we have got the approval. However, we have not yet executed any orders for them.
Okay.
Going forward, yes, we are going to receive orders from them. So it might help us in future.
Okay. And but domestic side, we have got approvals from everyone for LSAW plant.
Sorry?
On the domestic side, domestic customer base, we have received approvals from...
Yes, we received approvals from almost everyone now.
Okay. And in terms of the current order book that we have, around 2,900 crores you mentioned, what proportion would be there from water-related orders?
Water, rough, I can say about 30%.
30% of this 2,900 crores?
No, इधर भी कुछ नहीं है. Close to 30% would be water related.
Okay. This number is lower a year back, right?
Yes.
Okay. And is the water order margins materially different from oil and gas related orders, or is also there's some variation over here also?
So, in a normal course, the margins for water segment are less than oil and gas.
Okay.
But some orders, better margins, if like we are executing one order in Rajasthan, where we have moved the whole setup at site. So there the margins are a little bit better than the a normal course order.
Okay. And generally, lastly, how is the the orders that we're bidding for? How is that pipeline looking like? Is basically new order, the tenders are coming up are lower now, or still we see buoyancy in the new projects coming up?
So if I break it between carbon steel and stainless steel, steel for oil and gas, we are seeing less number of tenders coming up. But water demand is booming. So that segment is going to remain for next 6 months to 9 months. That segment, we will have a good amount of orders.
Okay.
And stainless steel, regularly, our strike rate remains still the same. Close to between 100 to 150 crores order booking per month.
Okay. So there is no issue. Okay. Which is pretty good. Okay, I think that would be all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Yash Goenka from Auriga Capital Advisors. Please go ahead.
Hi, am I audible, sir?
Yes.
Okay.
Sir, sorry to interrupt. The line for you is not very clear. May I request you to please use the handset while you're speaking?
Is it better?
Yes, this is much better, sir. Please go ahead.
Okay. So there are talks of setting up a stainless steel plant for backward integration with higher water business which has lower margin, higher capital. What shall be the ROC for the company, and what ROC level does the company intend to operate at?
I missed the first part of the question. So
the talks of you setting up a stainless steel plant.
Stainless steel plant.
Yeah.
Okay.
And with you having a higher proportion of sales to water pipe businesses, which has lower margin, higher working capital requirement. So what does it get to the ROC, and what it shall be going forward, and what does the company intend to operate at?
See, at a company level, because we are expanding both in stainless steel and carbon steel, right? So at a company level, and some products would go to water, some for oil and gas, some for other segments. So broadly at a company level, between 25 to 30% is what we aim for.
Oh, okay. That's all.
Thank you.
Yeah.
The next question is from the line of Vikas Singh from Phillip Capital. Please go ahead.
Good afternoon, sir, and congratulations on very good set of numbers. Sir, I just wanted to understand about your guidance. You have always been conservative at 16 to 18% kind of the EBITDA margin. Given that the first half was pretty good, so would you like to revise it, and how do you see this go in the FY25?
Because we will cut this side. See, basically, as we have been talking, the 16 to 18% range is for the longer term sustainable range, okay, based on the product mix and everything. In a particular reporting period, it may be quarter, half year, or a year, it may move towards more positive towards 18%, or in case of adverse market situation, it may move towards 16% sort of thing. So plus minus 1% we have been talking. This year, entire year, we should be in that 17-18% range sort of thing. This is our expectations going forward. As Manojji has already said, a few more orders in water segments are expected, and blended, we should be nearer to that range only. Positive surprises are possible. We'll definitely try our best, but to be practical, that 17-18% range should be there. Yeah.
Understood, sir. Sir, my second question pertains to the market and the order book. In 4Q, you were talking about the market being a little bit dull, but we have seen a very good order book addition. So how we should read this situation, or what is the bid pipeline going forward? If you could give us some insight.
As stated previously, we are seeing good demand for the water pipes in the carbon steel segment. And stainless steel also, our order book remains strong. We are almost booking close to 125 to 150 crores every month. And carbon steel, one big order in water segment or oil and gas segment can change the order book. Although oil and gas seems to be dull at the moment, but still there are good amount of water projects in Gujarat itself. Yeah. And a few export projects also we are bidding. So,
understood. Sir, is this possible for us to further improve our export percentage in order book? We are currently at 20%.
Yes.
So,
right
what
now,
is the peak level you are expecting? Because from other companies' perspective, what I learned that the export market is pretty good at this point of time.
Yeah, right now for oil and gas, export market, especially in Middle East, is very good. So we are also hoping to receive, and we are already receiving some orders, and we are hopeful that we will, going forward also, we are going to receive a few more.
Understood, sir. Sir, just one question on Ravi Technoforge. We were due to buy some more stake depending on some milestones. Given the performance doesn't seem to be improving at this point of time, what happens to the valuation part, or there would be a delay in the buying the remaining stake, or will it be valued at a much lower price depending on the milestone? So just want some clarity. In case if we don't reach the milestone, then what happens?
So, second tranche is a fixed buyout at a multiple of EBITDA, so which is at the end of FY24's result.
Understood, sir. Understood. That's all from my side, sir.
Yeah.
Thank you, and all the best for future.
Thank you.
Thank you. The next question is from the line of Manish Ostwal from Nirmal Bang Securities. Please go ahead.
Yes, sir. Thank you for the opportunity.
Thank you.
I have only one question on the geopolitics things happening in the Middle East. So, how you assessing
Sorry to interrupt, Manish. I think you are a little too close to the mic.
Okay. Am I now it is better?
This is slightly better. Yes.
Yeah. So my question on the Middle East geopolitical crisis. So how are you seeing the demand situation developing for our products in the export market?
No, see, in Middle East, especially everybody is expanding, be it Saudi Arabia, be it Abu Dhabi, be it Qatar. So these markets, in spite of geopolitical situations, are going very strong. Europe at the moment is a little slow, and US also a little slow, but still for stainless steel tubes and pipes, we are finding good demand from there.
Okay, sir. Thank you.
Yeah.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. The next question is from the line of Noel Vaz from Union Asset Management. Please go ahead.
Yes, I just want to confirm one thing. If we're looking at the overall growth prospects for the company, how should we look at it, and what is the current utilization? Thank you.
On an average, this year we would be anywhere between 4,500 to 5,000 crores. So on an average, 10 to 15% growth can be expected.
And in terms of current utilization levels, where are we at right now?
So current utilization for different segment, it is a different percentage, but on an average, you can consider 60% utilization.
Okay then. Thanks so much. That's all from my side.
Thank you. We have the next question from the line of Dheeraj Dave from Samvat Financial Services. Please go ahead.
Thank you for providing me opportunity and congratulations on good set of numbers. My one question is more on about basically this Ravi Techno Forge. What is the kind of expected ROC or return which we expect? And what is management's thought process? Because we see we are getting into related lines to acquisition or promoting subsidiary or acquisition or JV. So how should, rather than specifically to a quarter, how do you see your things get shipped out in next 3 to 5 years? And what would be kind of capex and what is typical your thought process, if you can give us some color on that?
So, this particular product, which goes to the bearing industry, our idea is to scale up from here, and in next 2 to 3 years, we want to do 500 plus crores of bearing rings and other auto products, which is from the forging industry. And we are investing from the Ravi Techno's balance sheet only.
Okay.
So, except for the initial investment what Ratnamani did, everything is being managed from RTL's cash flow.
Okay.
Yeah.
And basically, what would be kind of capex we should be looking at, since we are all, as you suggested, approximately
so
60.
Now, ongoing capex is between 40 to 50 crores.
This would be for Ravi Techno Forge?
Yes.
And for Ratnamani as a group total, basically we are also talking of that Swiss JV. So we would be setting up a new capacity, or is it a trading?
Ratnamani is close to 250 to 300 crores, where we have two major projects, one for carbon steel, one for stainless steel, which are ongoing.
Okay. And when this project will get over? This is normal capacity expansion?
By June of 2024.
Okay.
And carbon steel, where we are setting up a new plant by September of 2024.
September 24. Okay. And basically, any thought on capital allocation, since this year particularly we may see at least whatever 6 months, and fingers crossed if same thing happens, what is your plan for capital allocation or distribution of cash?
Yep. Can you repeat it, please?
Capital allocation.
So basically, what would be your dividend distribution? Should we expect some improvement in dividend payout for a year, or we like to manage stable?
Basically, at gross level, it is closer to 20% of profit. That should continue, because company has a lot of growth plans. Because we are not going to rest. With existing capacities, we should be in a position to reach closer to 6,000 crores, and we have to look beyond that. So team is working on various growth opportunities, and at appropriate time we will be sharing those details also. So part of capex and incremental working capital requirements will be met from internal accruals only. So one can look forward to closer to 20% of profit being distributed. Yeah.
Fair enough. Thanks a lot, and wish you all the best.
Thank you.
Thank you.
Thank you. The next question is from the line of Radha from B&K Securities. Please go ahead.
Hi, sir. Good afternoon. Many congratulations on good results, and thank you for the opportunity. So my first question was, in first half, what was the total mix from water segment?
Very difficult to give you precise number, but I can work on that and then get back to you. 1 second.
Okay, sir.
Give 122. Sorry, 142.
142 plus, so between 150 to 200 crores.
And on the from the volume perspective, I asked.
Volume,
volume normally we don't share, and value-wise this figure of roughly 150-200 crores for the 6 months.
Actually, why I asked that because you said 30% of order book from water segment. So just wanted to understand that in first half, based on the execution, whether it would be lower than 30%.
No. So, of the order book, first half it has been lower. Of the order book, we have 30%, but some of it is going to go for the next financial year also.
Okay. So, secondly, so L&T has won multiple orders with Saudi Aramco and also some hydrocarbon projects with multiple Middle East companies. So, could you please elaborate on the business opportunity with L&T?
Yeah, so 2 or 3 EPC contractors, they've got big jobs in Aramco as well as in ADNOC, which is Abu Dhabi National Oil Company. So most of it has just been awarded. So the design part, so we will see inquiries coming from later part of this year or early next year.
So, currently, out of the total order book, how much of the orders are from L&T?
That customer-wise breakup we do not have, and we would not like to share.
Okay. So, thirdly, my third question was that could you please share some insights on this JV with Teague? How much would you expect to invest, and what kind of margins can we make? What would be the source of capex, funding the capex, if any, for this, and margin profiles and ROC profiles?
So, this company is recently formed with 51% being RMTL and 49% Techno Energy. The total investment plan is 40 to 50 crores in next 6 to 12 months. And so part of the capital what Ratnamani will bring in, and another part will be brought in by another partner, and balance we will have to see whether we will go for any debt or any other instrument.
So for us it would be 20 crores.
25 to 30 crores for us.
Mm-hmm. Okay. And so this, thirdly, have we done any bill discounting this quarter?
No.
No.
No. See, in respect of one of the orders being executed by Ratnamani, it is under RPA arrangement. So those invoices have been discounted and payment has been received by the company. And that is the reason the finance cost has been a little higher.
No, so I asked because the receivable days have come down. So on that basis, I had asked if we have done anything.
It is there. Both things are, if you look at the figure, receivables have come down and there has been an increase in finance cost, which is related to bills discounted in respect of one of the orders. It is an arrangement under the order itself where interest cost has been inbuilt in our pricing, and documents are discounted by the customer itself under bill discounting facility, supplier's bill discounting facility. Okay, sir.
So I wanted to understand, will we continue with these kind of receivable days?
Difficult to say because order to order based on the arrangement, it may change. Because it is in respect of one of the orders only, and because company has been cash surplus, usually we don't go for even LC bill discounting because there is a negative carry. Whatever returns we get from our investment are much lower than the discounting cost. So that is the reason on any reporting period, and one may see higher receivables also, but for this one order.
Sir, could you quantify the amount of bill discounting that we have done in first half?
See, that will be roughly 140 CR sort of thing.
Okay, sir. So, the last question was on the Ravi Technoforge front. So, actually, there is a YOY degrowth in first half in Ravi Technoforge. So, both in the revenue and EBITDA front. So previously we had guided that we wanted to achieve 300 crores revenue in Ravi Technoforge. So are we still on track with this guidance, or is there any revision?
If we see with the corresponding last year, I mean, there is no degrowth, but there is no growth. Against 120 crores, we did the sales of 124 crores, and EBITDA of 12.2. Against that, we did 12.6 crores. Yes, because the major reason here is the exports have shrunk and our share in the domestic industry has increased because of the current geopolitical situation. But going forward in the second half, things look to be better, and from here on, from the last year's number, we see that there will be 10 to 15% of growth.
But one more impact has been there, that of commodity prices coming down compared to what they were last year. So some impact of that thing is also there, because realizations are directly linked to the commodity prices.
Yeah, and if we see the production per se, then it has gone up by 6% in the first half.
YOY. First half YOY versus first half FY23. So actually, sir, in previous call, you mentioned that the revenue from Ravi Technoforge was 240 crores in FY23. And so that, and we have the 3Q, 4Q numbers, so that implies that first half FY23 revenue must have been 136 crores. So basis that, there is a 10% degrowth. So you're saying volumes have grown up 6% YOY. So realizations would be down 16% YOY?
Yes. Yes, you are understanding.
So this is entirely due to commodity?
Yes. Entirely due to commodity, steel price, which has gone down.
Plus some impact of degrowth in export, as Manojji has already shared. And it is mainly because of geopolitical issues, whatever is happening in Europe, that has impacted demand from European gearing manufacturers.
So by when do we expect to go back to FY22 margin levels in Ravi Technoforge, the 13-14% EBITDA margin that we had done?
We will be close to that by the end of this year.
By 4Q FY24?
Yeah.
Okay, sir. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Vinamra Herawat from JM Financial. Please go ahead.
Hi, firstly, congrats on a good set of numbers. My question was, many steel players now getting into steel pipes and other downstream products. So what are differentiating factors for Ratnamani?
Yes, see, a lot of players are investing in the manufacturing of stainless steel as well as carbon steel pipes. But the kind of approvals, the kind of range, the kind of facilities what we have, it will take time for them to create and catch up. So that is, and the number of approvals what we have is also very wide. The geography what we have covered.
What do you mean by number of approvals? Sorry.
Number of approvals from the oil and gas companies, chemical companies, nuclear power plants, and defense, aerospace. So those approvals, those are all 6 months, 12 months, 2 years process.
Okay.
And the kind of capital investment required to have maybe capacities and range like us. At this point, in one go, would not justify it.
Makes sense. Okay.
Vinamra, does that answer your question?
Yeah.
All right. Thank you.
Thank you.
Participants who wish to ask questions may please press star and 1. The next question is from the line of Poojan Shah from PS Ventures. Please go ahead.
Initially, I missed the order book of R and the sector specific. So can you just give us the broad idea of
Can you please be a little loud? I am unable.
Yeah. Am I audible now?
Yeah.
Yeah. So can you just provide me with the order book size and the sector-wise order book, because I missed the initial call?
So our order book stands currently at 2,975 crores, of which domestic is 2,370 crores and balance is export.
Okay. And sector-wise, oil and gas and...
Sector-wise breakup, we are not giving anymore.
Okay.
Major will be oil and gas. Right now also you can say almost 70% should be oil and gas and related fields, power sector and continuous process industries. Roughly 30% might be from water application.
Okay. So in the initial phases, as we have witnessed from the last few quarters, we have been witnessing the oil and gas has been booming, and as well as the water segment. So are you seeing any upcoming new sectors has been getting into traction, like we are getting newly into engaging into new sectors specific to that, or we are seeing the order book is growing on already on this
no, as of now, no new sectors have been added. But yes, within the sector, there can be plus and minus. Water, of course, as I informed earlier, is one area which is booming at the moment in various states. So that is one area. Oil and gas is a little slow on the line pipes side, but on the process side, it is still okay.
Okay, got it. Thank you, sir, for the answering the questions. All the best.
Thank you. To ask a question, ladies and gentlemen, please press star and 1. The next question is from the line of Radha from B&K Securities. Please go ahead.
Sir, could you tell me the export sales mix from Ravi Technoforge in first half?
1 second. Exports are 30% in first half.
It was, and how much was it in first half FY23?
38 to 40%.
Okay, okay.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. We have no further questions. I would now like to hand the conference over to Mr. Sahil Sanghvi for closing comments. Over to you, sir.
Yeah. Thank you. I would just like to thank all the participants for attending the earnings call and having patience of hearing me out. Just thank the management also for answering all the questions efficiently. Manoj sir, would you like to give any closing comments?
Yes, Sahil. So we thank you all for participating in the earnings call and hearing us patiently. I would also like to wish everyone a great festival time ahead. Thank you.
Thank you, sir.
Thank you. On behalf of Monarch Networth Capital, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.